Welcome back, everyone. The currency that has enjoyed the most dramatic, sustained bull market isn't a paper currency at all. It is a hard currency. Of course, we're talking about gold. Joining us on set for a closer look at gold and its relationship to the dollar are Sean Brodrick, small caps and natural resources analyst at Weiss Research and the editor of Crisis Profit Hunter, and Bryan Rich, the editor of the World Currency Alert. Sean, I want to start with you first. Is gold a better way now for investors to protect their money than the dollar? And what are the chances of gold actually becoming the world's reserve currency?
Well, we have seen gold in a bull market for the last 10 years. No one's going to argue about that. The thing is, bull markets in hard assets can last for 17, even more than 20 years. So the run in gold is probably only half over. I think it's a very good way to actually protect your money. Now, as to whether it could become the world's reserve currency, I think it could become part of a basket of like hard assets that currencies might be priced against. Not just the US dollar, but like other currencies as well. The thing is, that kind of conversion would be a huge change in the global economy. It would upset many apple carts, and many people don't realize how upsetting that would be to their own way of life. And so we could see that, and I'm actually kind of expecting it, but it won't be easy for anybody.
Bryan Rich?
Will gold supplant the dollar as the next reserve currency? I don't think so. But will gold continue higher from here? Likely. I mean, given the economic challenges that the world is facing and the sovereign debt problems that have a ways to be sort of solved, it all bodes well for gold. It all bodes well for more uncertainty, for more fear in the markets. People like to buy gold. People like to shy away from paper currencies in this environment, as governments are likely to respond to their sovereign debt problems through currency devaluations. So gold continues to do well as a result of that. I think the dollar will continue, though, to move in tandem with gold, as we've seen in this crisis environment, because I think the dollar still is the best alternative among paper currencies. People want to align themselves with the biggest country in the world, the deepest and most liquid capital markets, and those are dollar assets. And I think the dollar will continue to do well, but I do think there's a lot of fear out there, and fear will drive gold higher.
Here's the thing, Brian. I think that we're in a deflationary environment now, or at least it's extremely low inflation, but it seems like we're in the beginnings of a real deflation. In that kind of environment, you would think paper currencies would actually do pretty well, because the price of things goes down. Instead, we see the value of gold and silver going much higher. Fear is part of it, certainly, but I mean, it's a lot more to it than that. I think people are seeing the governments of the world, not just the US government, monetize their debt. They are really started to worry about what could happen to those paper currencies down the road, to those fiat currencies, and so that is a big part of it. But there are other fundamental factors as well. For example, we are seeing more and more people around the world join the middle class. Here in the US, everyone's concerned about our economy, but in other markets around the world, things are doing very well. And the World Bank estimates that 1.5 billion people will join the middle class in the emerging markets over the next 20 years. In many of these countries, they have a real cultural affinity for gold. And so that will be driving the gold market going forward as well. So it isn't just fear, though it is there, and it is important, because in this kind of deflationary environment, you would think gold would be going lower and paper currencies would be going higher. That isn't happening, and so that tells me something big is really up.
Bryan, do you agree?
When you look at the performance of gold relative to all currencies, gold is appreciated against practically all paper currencies. In fact, the British pound has taken the most punishment against gold dating back to the middle of 2007, when the crisis sort of began to unravel. About 150% gold has gained against the pound, about 100% against the euro, roughly 90% against the dollar, and around 80–90% against the Australian dollar. So if you look at sort of the spectrum of some major currencies, the dollar sort of sits right in the middle, because it continues to be in demand as a paper currency that represents some safety and some security relative to other paper currencies in the world.
Well, here's the thing. I don't think the US dollar is going to lose its reserve status anytime soon. But I believe that the potential is out there, and it's growing simply because of the way that, the debts are being monetized and the other poor choices being made, not only by our government, and like we often dump on the US dollar, but also by the governments in Europe and around the world. And so this is something that could happen, I believe, and it's something that I'm starting to prepare for. It's not like it's going to happen tomorrow, but unless things change, the potentiality is really out there. And by investing in gold and silver, you can take out a little insurance against that.
Well, geopolitically speaking as well. I mean, look at Russia and China. Of course, they're trying to wean themselves off of the dollar as the world standard. Your thoughts there? I mean, how much of this is just countries positioning themselves to strengthen themselves globally?
Well, I think there's certainly going to be more diversification away from the dollar. These countries, China and Russia, that are trading more actively together, there's no reason for them to do trade in the dollar. But the dollar remains the global reserve currency. It's remains the currency that most trade is done in. Will it slowly over time begin to be diversified away? Probably so. Will it be diversified into hard currencies like gold? Very open question. I don't know. We have some very uncertain times ahead of us. We could potentially have another decade of deleveraging this credit cycle that took over a decade to build. And within that, we're going to have a lot of economic shocks and a lot of economic surprises. People are going to continue to buy gold as a result. There's a massive fear premium, in my opinion, in gold. How much? I'm not sure. How much is fundamental? How much is fear? I think a lot of it is fear. But I do think in the end, if we are able to return to a sustainable path of growth for the global economy, the dollar will still be there and will still be a leading paper currency. Gold may retain a more sustainably higher price level than it did pre-crisis. I'm quite sure it will, in fact. Will it be at $5,000? I would say far less likely than it might be at $1,000.
Sean, I want to ask you a little bit about other precious metals out there, platinum, palladium, even silver. Could they ever be considered a hard currency?
I think eventually we will get to the point where they could be. Now, this again, not anytime soon, but when you look at how cheap these things are compared to where they could be, I mean, there is so little palladium pulled out of the ground that it really should be priced much higher. Now, it's mainly used as an industrial metal now, as is platinum, really. I mean, yes, there's jewelry uses for platinum, but it's really used in cars. On the other hand, what did we see in, like, China back in July? We saw their car sales jump 56%. And they are selling so many cars now that it's just incredible. So we will see more industrial demand for these metals, not only for platinum and palladium, but also for silver, because silver is an industrial metal. But if we get to the kind of financial crisis that I've been speaking about, then yes, these things could become real, actual currencies. Not only them, though. I mean, we could see the empires of the world have to put up or shut up when it comes to their currencies. They may have to back up their currencies with a basket of hard assets. That could include gold, copper, silver, platinum, palladium, oil. I mean, other things could work in there as well. So yes, I do believe that they do have a monetary future, though it may not be as soon as like some of the real gold bugs think it could be.
Bryan, Rich, the last word to you.
I think the end result we're talking about here is inflation. Inflation, paper currencies devaluing against hard assets. And I think that's well in expectations. It's a matter of when. Right now we're seeing deflationary forces. At some point, I think the response to all of the sovereign debt problems will be currency devaluations, and therefore we will have inflationary forces against hard assets. And I think that's sort of what we're getting to here with some of the metals and some of the other commodity markets moving higher over time.
Okay, Bryan, Rich, Sean Brodrick, thanks so much for joining us.
Thank you.
Also, thank you to Rudy Martin and Jen Amos. And remember, if you have questions, comments, or suggestions for topics that you'd like us to cover, just email us here at Weiss Money Network at weissinc.com. Coming up next week, we're going to revisit a topic that seems to be back on investors' minds, sovereign debt. It's a problem that may have been swept under the rug by this summer's European bailouts, but it's not a problem that's gone away. And it's threatening the governments and financial institutions, not just of Europe, but the U.S. as well. That's it for this edition of Money and Markets. I'm Jamie Holmes, and now, in for Martin Weiss, here's Mike Larson.
Thanks, Jamie. Even the most casual investors can easily track their holdings in stocks, bonds, and commodities. One glance can tell you whether you're making money or losing it. But currencies are more complicated because every trade is a pair trade. The yen doesn't just go up, it goes up against the US dollar. And the euro doesn't just go down, it goes down against the Swiss franc. But those trades also give us context for understanding the moves in our other investments. And in some cases, they even allow us to anticipate the trends shaping the broader market. For instance, the recent rally in the yen and the Swiss franc suggests there's a flight to safety among investors concerned about the continued weakness in Europe. That should serve as a warning to take a hard look at any European holdings you have. Moreover, the euro's steep decline indicates fundamental structural problems with the shared currency. It may even represent the first steps along the road to an eventual breakup of the monetary union and the disappearance of the euro entirely. Now, central banks historically have some power to manipulate currencies, and we see them trying to do it all over the world. The Bank of Japan has been trying desperately to devalue the yen, for instance. And as Martin Weiss has suggested in the past, the Federal Reserve's ultimate goal may be to inject enough cash into the money supply to debase the US dollar. That would reduce our debt burden and make US exports cheaper. The problem is those short-term interventions tend not to work over the longer term. Indeed, most central banks have proven themselves powerless to manipulate their currencies over time or to shorten long, painful economic downturns. But there's one country that has been remarkably effective at manipulating its currency, and that's China. So it's instructive to look at China's monetary strategy for clues to future moves in the currency markets. When China unpegged the yuan from the dollar this summer, many investors interpreted that as a concession to U.S. lawmakers, who were complaining about the trade imbalance caused by an undervalued yuan. But as Bryan has pointed out, the lack of appreciation by the yuan since then suggests that the move was something entirely different. China was actually trying to keep its currency cheap and keep its exports attractive, and it's working. So viewed in that light, China's strategy can be seen as a bet on continued strength in the dollar and continued weakness in the euro. This is just one example of how countries use the currency markets as a vast geopolitical chessboard, and it illustrates why it's vital for you to understand those markets and to adjust your investment strategy accordingly. I hope we've helped you to do that this week on Money and Markets. I'm Mike Larson. See you next week.